All right, Kev, it's time for us to take a dive into a story that you recently wrote on your macro tourist blog, and I thought it was really interesting. And we're going to talk election probability theory. And well, you based it all off of that Ray Dalio and Paul Tudor Jones interview where they talked about this, right?
Yeah, a reader was kind enough to send me this video, and I've been meaning to write something about it, and not just this one topic. There's so much in this kind of 45-minute interview that I'm going to have multiple posts coming out about it. But this one point that Paul Tudor Jones went, and he went through his thinking about what the effect of the extreme outcome of basically the policies of the far left, what they might mean if they win, and therefore how the market might have to kind of discount that. Well, let's just instead of me explaining it to you, why don't we
Yeah,
just
let's
play the
watch the
tape?
video. Sorry, yeah.
If I think about just this next election and the difference between Donald Trump and Elizabeth Warren, we did this poll internally about where the S&P would trade if Elizabeth Warren became president. And then we took the bet, and then Biden and Buttigieg and Klobuchar, et cetera. And then we took the election probabilities. And so our poll said if Elizabeth Warren was elected, the S&P would trade around 2250. I think it's at 3050 now. But I'm just saying her policies probably would, assuming that they were implemented, probably would give you something like that. And then if you just take election probabilities, that would imply, what would, if you anchor that, I think Buttigieg and Biden were like 2,700. Because again, they're going to come in, raise taxes. That's going to cause probably some economic contraction. So that would imply that Donald Trump, if he gets reelected, the S&P is worth 3,600. So as an investor, you have to have a view on the election because the outcomes are so extreme. I've never seen this kind of polarity in the elections as we have now. And they always say, oh, well, it doesn't make any difference who president is. You know, the markets rallied 53% of the time under Democrats and 52% of the time. It does make a difference. Ronald Reagan, when he became president, was a huge difference to the stock market. And I would say who the next president is also going to have a huge impact on the economy, the stock market, particularly asset pricing, because clearly asset prices today, whether it's U.S. stocks, whether it's interest rates, whether it's the dollar, it's all priced off of, in my opinion, a 5% budget deficit with this incredibly overly stimulative fiscal policy combined with this overly stimulative monetary policy is creating this U.S. exceptionalism that one day, like if we normalized our deficit to where Europe is right now, would have a completely different valuations for the stock market, valuations for the dollar. The dollar would be substantially lower, I believe. So this next presidential election and what policies they pursue afterwards, I think this one is going to be more meaningful than any one, certainly in my lifetime. So it's going to be really interesting.
I agree with you. So I'm mechanistic. I'm not ideological. I'm just mechanistic. So I do go through the calculations. And if you take the way corporate taxes would change, the undoing of that, that's worth 7 or 8%. If you take the changes in gap accounting, so changes in the taxes for corporations, that's worth about 15% of earnings, and it will therefore would drop it on the basis of that alone. If you take then the wealth tax is $2.8 trillion over 10 years, and so that'll have an effect. So it is, and then that doesn't have to do with regulation and the changes in regulation. I think we are dealing with the question, again, like the 30s. Is it populism of the left or is it populism of the right? And how's that going to work? And that's not just an American issue. It's a UK issue, and Jeremy Corbyn it's a UK. So we have an issue in terms of that politics will certainly matter to asset prices.
So Paul, in his Southern voice, explains to us what they did in terms of the math. And I know this isn't drawing pictures on a chart, Patrick, so you're not going to like it as much. It's actually doing some math. But I thought it was an interesting kind of concept that he went through. And he said, if the outlier event of that kind of either a Sanders or a Warren win is truly that negative, that means that if you discount that and then think about the other side, meaning what would the Trump win have to be to make it balance? And I actually came up with a number that was much higher than Tudor Jones. I actually came up with a number using.
Are you saying that Paul Tudor Jones doesn't know how to do math?
No, maybe I don't know how to do math. I had trouble with my spreadsheet. Maybe we were using different predictits, but just to kind of walk you through it, at the time when I did it, it was November 1st. Trump was trading at 40 cents. Warren was trading at 23. Biden was 14. Buttigieg, I don't know how to say that, 11. Sanders, 9 cents. Bloomberg is 2. And then everyone else is a penny. So then what I did is I put in the 22.50 for both Warren and Sanders. I put in for Biden and Buttigieg, I put in 2,700. I kind of assumed that everyone else would be unchanged. And then I looked at Bloomberg and I said he's probably maybe a positive. So I put in 3,200. Then to balance that, I realized that when you probability adjust it, that you would need a 39.42 outcome, which is what, 900 handles higher than at the time when they wrote this. And I thought to myself, well, that can't be. That's probably not correct in terms of maybe the reality is that a Warren isn't as bad. Maybe it's 20%. And maybe Buttigieg is only 10%. So I put in the numbers and I kind of changed them. I changed them so Warren was 24.54 forecast instead of 22.50 like Tudor had, and then I made Buttigieg and Biden 27.60 instead of 2,700. And then I adjusted it and looked at it, and basically what I came up with was Trump was 37.41. So
on the S&P, just so our listeners understand, we're talking about the levels on the S&P 500, which at the time right now is trading at 3,146.
Right.
At the time
so
we're
now,
doing this. So
the interesting thing about this is that we could talk about the fact that there's these two very large diametrically opposed outcome. One is you get somebody that wants to do a wealth tax, that's somebody that wants to do a financial transaction tax, that wants to go and raise the corporate tax rate, and then on the other side, somebody that's very pro-business like Trump. So the market is going to have trouble discounting this. Now, some people, wrote me back to say, well, the reality is the market doesn't think that far ahead, and there's no way that it's doing a proper job discounting it. And all you have to do is look at the Trump election, because the market hadn't discounted that at all. And I agree, but I still think it was a nice intellectual kind of exercise to go through that Tudor brought up. Now, the one thing I do want to, that I think is kind of something smart to think about, is the fact that we can go and examine how much these odds have changed since Tudor made that presentation. So if you go look at the prices of the different candidates now, you'll see that Trump has moved up to 45, so that's a change of a nickel, so 5% higher. Warren is now down to 9 from 23. She's down 14. Biden is at 15. He's basically unchanged. Buttigieg is up 3. Sanders is up 2. Bloomberg is up 6. And then everyone else, it's just basically I zeroed that because the reality is it's a little complicated with these the way that the predicted market works, that it actually doesn't add up to 100. It adds up to more than 100 because people are paying an offer. But anyways, it doesn't matter. The point is that when I put that into my model, leaving everything else the same, and I just change the odds that the predicted markets have moved, and I come up with a new kind of equilibrium price for the S&P, it actually means that it should be 63 points higher. And ironically enough, when I wrote the blog piece, it was only 43 higher, but I think today it's probably now 63 plus higher.
Right.
Now, and listen, as I write in my piece, this is just back of the napkin voodoo. No, it's
a black art.
It's only one step up of the black arts. But yeah, But it is interesting to think about the fact that Bloomberg entering the race alone, to me, is worthy of the stock market having to rally, because
Yeah.
he has a decent chance of winning the nomination, and he's probably going to be at the very least stock market neutral and not negative. And then
Okay,
in
yeah.
the meantime, you see Warren and Sanders. Well, Sanders is unchanged, but Warren has collapsed. And let's face it, she was probably the most stock market negative out of all of the candidates. So the
Right.
fact that she collapsed is also, positive for the stock market. So, there's a million reasons why we're rallying, over the last couple
But it could be
weeks.
one of them.
But I definitely think that this is one of them.
So the question I have for you is this. Like, I'm going to say it naively because I don't know whether I'm asking a stupid question. You're about to tell me. Right now they announced that they were proceeding with like impeachment, and from what I at least saw just loosely reading, the odds of Trump being impeached actually jumped. I don't know what the exact number is, but it jumped considerably. And now, does that change that predict number for Trump? I mean, he may not. If he gets impeached, or at least the probabilities of him being impeached went up, his chances of winning must have to be affected going down, no?
Well, you're right, but then who replaces him if he does get impeached? Who replaces him on the right? You might
Right.
even argue that there might be somebody that has a better chance of winning, and him being impeached is actually positive.
You think so, eh?
Well, I don't know. Listen. I'm not predicting that. I'm just saying that that's a possibility. So yes, of course, him being impeached will mess all the numbers up. But I wouldn't say that him getting impeached necessarily causes the Democrat numbers to jump significantly. I still
This is
think
when I'm
that,
glad to be Canadian. I don't have to
Yeah.
deal with this.
Yeah. Well, no, but you do have to deal with it. And
Yeah,
I kind of did talk about the fact that, and you heard both Tudor Jones and Ray Dalio talking about how politics is becoming an increasingly important part of the investing landscape in terms of how you set up a portfolio. And the one thing that you kind of if you're going to take anything away from this kind of exercise that we did, it's the fact that the two outcomes could be very, very large on either side. Very
The
large.
interesting thing I want to ask you though, like how were the numbers looking before the election of Trump? Because that was one of the most bizarre things where the market basically like puked right after the Trump victory, and then almost immediately rocketed higher. I mean, how was a model like this predicting the outcome of a Trump election back then?
Well, I think though back then you weren't sure whether Trump would be positive or negative for the stock market, and not only that, you kind of had to assume that Hillary was almost a shoo-in, right? Most of the models were saying that she was going to win, like in terms of the prediction models. So therefore, the market had kind of priced in Hillary, and it was so at that point it's unchanged because they're
Right.
expecting that. And then the question is, how would you have determined what would the Trump's effect on the stock market be? A lot of people claimed, remember, Mark Cuban thought that the economy was going to tank. All sorts of people said negative things. And I remember trading that night because it was a wild night. But I was
Yeah.
why is everyone thinking this is so negative? And I got long too early and got run over, but eventually started making it back on the bonds. Because one of the things that I realized, I remember bonds went super bid, and I thought to myself, this guy is going to spend. And this is going to be, in fact, inflationary, and there's no way that you should be buying bonds.
And you were
I-
dead
I-
wrong.
No, that's not true. At the time, it was a great trade. I think that the bonds were up I can't remember. They were at 3 or 4 handles, and they finished the night only up 1 or 2. Or
Oh,
it
you're
was-
talking
it was
like a little
big,
swing trade, right?
Yeah, I'm just talking like overnight because I remember that. It was a wild, wild night. It was a lot of fun trading. But so I don't think that it works quite as well to kind of go through that same sort of math, because at that time you weren't sure. And not only that, the market obviously wasn't sure what they thought of Trump and whether that would be positive
Yeah,
or negative.
this time around into the elections, it really can go either way, right? Like, I mean,
Yeah.
you could give
Well, now that-
give an edge to one side versus another, but
The real question is the pushback to this is that whoever gets elected can't affect the market as much as they think. So even if Warren gets elected, she's not able to pass the kind of draconian, measures that she's calling for. So therefore, the stock market's not as bad.
So you think there's a potential of a bit? Do you think there's a potential for a pretty big swing when the Democrats ultimately announce who their candidate is? Like, is there room for this to be relatively violent for the stock market, or at least a short-term move? Not like
I completely think that we're going to be watching every poll and trading it from one extreme to the other, because let's just say that they do elect a far left kind of Warren type candidate. I think that you're going to see as we get polls that show them winning or losing, the market will be forced to discount that as it moves around. And therefore, because the two extremes are so large, you're going to get bigger swings than normal. Let's just imagine that instead, Patrick, that there was let's just say that it was Bloomberg versus just another like Romney.
Right.
Like, let's just imagine it was Bloomberg versus Romney. The stock market would almost not care. Like, yeah, at the margin that there would have been some kind of up and down, maybe a little bit. But contrast that to Trump versus Warren, and you can understand why it would mean so much more and it would cause so much more volatility.
Right.
Yeah. So, anyways, I think it's interesting. I thought it was a great point that Tudor made. I really enjoyed his way of thinking about the markets, and I thought it was a really terrific, kind of thing that he did with his staff. I wonder, though, if he included everyone. He said did a poll. Was like the front desk person allowed to vote in the poll too? Who is voting on the poll is what I want to know. Because all I could say is
I almost
that's
choked
pretty,
on my beer when you were saying that.
yeah, because you know what? The reality is that 2250 is pretty catastrophic. I can't speak too much beer, but it's going to cause it to go down a long way. 2250, I think that's pretty bad. Like, I don't think that would be the case.
Yeah, 30% swing in the market's pretty steep.
And so, you know what, actually, Patrick, here's one last point I'll leave you with. One of my MMT kind of type followers gave me shit because he said that, in fact, that Warren and Sanders will be less market negative than Biden or Buttigieg because they're going to try to balance the budget. And I will agree with him. If you're listening, I will agree with your analysis as it pertains to the economy. That actually Warren and Sanders might in fact be better for the economy, but I think for the market and especially for the initial reaction, the market will freak out at the other two.
Okay,
so
I'll agree with that.
I stand by my point, but I do, when I think about the kind of Buttigieg or Biden, and I hear them talking about balancing the budget, and it scares the shit out of me because I actually think, Patrick, that would be the worst thing for the economy.
Oh yeah,
and I know
all
the hard money all the hard money guys are going to tell me I'm wrong and stuff, but like meanwhile, our economy is doing well because Trump is willing to go for it, and that's why the U.S. is the strongest economy in the world.
We're already going on too long, but I would have wanted the conversation.
Patrick's like, please stop talking MMT. Please stop talking MMT.
No, but you know what? I'll actually agree with you. I think that the hard money guys are going to be wrong. I think that while I'm not advocating MMT, I certainly think that balancing the budget would not be taken very well. Okay. Anyway,
well, there you go. You heard it first. We'll make an MMT out of Patrick before this is all
my God. Oh my God.
Okay,
all right,
let's
here we
move
go.
on.